Ladies and gentlemen, good day and welcome to the Medicure Q4 and FY22 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mitesh Shah. Thank you, and over to you, sir.
Thank you, Seema. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all for the Q4 FY22 and the full year FY22 earnings conference call of Medicure Limited. We have a senior management of the company with us today, represented by Mr. Himanshu Baid, the Managing Director, and Mr. Naresh Vijay as the CFO, and Avinash Chandra as the Company Secretary. With this, I hand over this call to Mr. Baid for opening remarks. Over to you, sir.
Thank you very much, Mitesh, and thank you everyone who's on the call, and thank you for your time. And I'll just take you through the journey of quarter 4 and also tell you about the highlights of the quarter, and then we can talk about the whole financial year as a whole. So the highlight for this quarter was that revenue almost jumped by 20%. If you compare from Q4 of FY21 to Q4 of FY22. And the major contribution came from India and export markets both. If you look at the percentage of sales for exports were around 65% in quarter 4, and 35% revenue came from India business. And in terms of EBITDA margins were close to around 23.5-24%. And we have seen that there was still a lot of pressure because of raw material pricing and high supply chain costs. Also, there has been an acute shortage of materials due to disruption, in Far East, in China, and some other countries. And globally, the whole supply chain has kind of taken a backseat in terms of delay in supplies from most of our major suppliers. As you all know that we have almost 200 suppliers of raw materials outside India, and that has been a cause of concern, and that is the reason from last 6 to 8 months we have been building on higher inventory for raw materials, and we're trying to maintain a stock of at least 2 months of raw materials. And that's the reason on our balance sheet you will see also increase in stock inventory in terms of raw material. So this is one of the major reasons for that. That looking at the current scenario where we are not sure when the goods arrive from even the shipments are getting delayed at ports, and the transit time has increased by at least 50% in most of the cases. Even when we are exporting products, the products are not going direct to the customers. They are reaching by 2-3 via modes, and there has been a delay even in customer receiving the goods at their end, and that is also causing some kind of a pressure on reordering from the customer. But overall, I can say that the guidance we gave for the whole year as a whole for between 17 to 18% growth, we have maintained that. So the total income of the company in FY21, which was 766 crores standalone basis, has increased to 918 crores. And in terms of consolidated basis, the total income has increased from 804 crores to 960 crores. So there has been a good increase as we had planned. And in terms of EBITDA margin, yes, we have taken a hit. In fact, in my previous quarter 3 call, I mentioned that the total EBITDA for the year FY22 will be between 24 to 25%. So if we see year as a whole, FY22 EBITDA is around 24%. Though we have been able to pass certain costs to our customers, but because of this changing scenario where the costs are increasing for plastic materials, for paper, for steel we use, for needles, everything, for every commodity, every product, there was a cost increase. I think now at this moment we see softening of the prices a little bit. Maybe they've dropped by around 5-7% raw material pricing in last few weeks. And if this trend continues, maybe in next 3 to 4 months, we will see maybe normalization of prices to maybe mid 2021 levels where the prices have stabilized a bit. So and also I think global inflation is also a worry where currencies are also taking a bit of a hit. We have seen dollar depreciated by a few percentage in last few months. Though this is positive for the company as we have almost if you look at our exports, 75% of our exports are dollar denominated. So which is good for the company that if dollar depreciates, we will get some additional 2-3% margin on our export products, and that may also mitigate, to certain extent, the drop in EBITDA margin which we have seen in this current last financial year. So when we look at domestic sales, so in FY21 domestic sales were around 30% and export sales were 70%. But in FY22 domestic sales is around 35% and export sales is around 65%. So there is a healthy increase in the domestic business. Almost there's a growth of 30% in domestic business, whereas the export business has grown by around 11% or 12%. We have been launching a lot of new products. I'm happy to announce to our esteemed shareholders that our new dialysis machine we have already placed, indigenously manufactured machine. We have already placed 2 machines in 2 different centers. They are undergoing testing right now, and we will put them for test for around 2 to 3 months. Once everything is in order and the performance is satisfactory and has been validated, we'll be able to launch, put into commercial production by July of this year, the locally indigenous manufactured machine. And I think in the government programs, wherever they are buying dialysis machines, they will prefer the locally made machines, and I think we see a good traction in future for our machines, dialysis machines. We were part of 2 PLI schemes, PLI 1 and PLI 2. So in PLI 1, our dialysis portfolio was covered, and in PLI 2, our diagnostic portfolio was covered. So we have already made, in PLI 1, we have committed investment of 70 crores, and in PLI 2, investment commitment is 50 crores. So we will do much higher investment, but that is the minimum commitment we have made to the government. And in terms of revenue, in PLI 1, we have to, year on year, we have to increase the revenue of dialysis products by 60 crores a year. And in that 60 crores is domestic sales and export sales. So we are also building our portfolio for export business. We are adding some more product categories in dialysis business, which will help us to get into export markets, because today our products are being exported to more than 120 countries. So we have a customer base, we have the market. So all we need to is to calibrate our products as per the export market, and then we'll be able to even look at those opportunities available to us. In PLI 2, we have diagnostic kits like ELISA-based kits for HIV, HCV, HB1AC, or dengue or malaria kits, and also blood collection tubes and other VTM kits and everything. And we have already developed all the products. Already we have started commercializing most of these products, and all the schemes have been operational in terms of revenue recognition from 1st April 2022. So it's just the beginning, and we have a 5-year runway for this. So hopefully, if we are able to meet all the targets which are laid out in the scheme, in PLI 2, on every incremental revenue of 1%, we will get 1 crore, we will get 5% incentive. In PLI 1, which is for dialysis products, we will, on every 60 crore incremental revenue, we will get a 5% incentive. So this seems to be a very lucrative scheme, and all investments have been done, everything has been finalized. So we hope that if we meet these targets, at least it will help us a little bit in some margin improvement during the year and in coming years. When we look at guidance for FY23, guidance is for between 18 to 20% sales growth for FY23. Exports should increase by around 15% in the coming financial year, and we are also seeing domestic business to increase by 25 to 30%. In domestic business, we are recruiting almost close to 100 people in sales and clinical team. So this is already happening as we speak, and from the current level of 275 people, we will end the financial year with around 375 people. So we are trying to increase our reach into corporate hospitals. We are trying to increase our reach into Tier 2, Tier 3 cities. Even in Tier 1 also we are increasing our penetration. And today most of the large chains hospitals are using Polymed products. So and we continue to engage with them more deeply, and we are trying to push more and more business through these hospitals. And we see that volumes are increasing in corporate hospitals, also in Tier 2, Tier 3 cities, in standalone hospitals. We are also able to reach out and push our products there. In terms of the business overall, if you look at export business, 60% business is in developed countries, mainly in Europe and North and South America. And we are hopeful that this will further, grow in the same ratio as other businesses are growing. And we are also expecting our US FDA by August, most probably August, September. That is the timeline we have right now. And we'll start with few products, and then we have more products in the pipeline where we have applied for FDA, and hopefully by end of the year, we will have, at least 4 or 5 products will be US FDA cleared, and we'll be able to sell in the US market. Our subsidiary, step-down subsidiary in Italy, Plan One Health, has clocked a 30% increase in revenue last year. So the base is small, which is mainly for oncology products. In FY23 also, we are expecting the revenue to increase by 30%. And we have a good traction. Last 2 years, because of the pandemic, the sales for oncology products, the demand was not as high as we had expected initially. But we have grown last year by 30%, and this year also we should grow over 30% through our subsidiary in Italy. We are launching some new. So this year we have a plan to launch around 8 to 10 new products. Already in the presentation we have shared on our website, investor presentation, the products are there. And there are still further few more products which are under development. So our target is to launch 8 to 10 new products every year. And from consumable company, we're also trying to get into equipment step by step. And our plan is that in next couple of years, we'll launch more equipment which will complement our consumable business. So the idea is that wherever, we get locked out today because of equipment we can't offer today with our consumables, we are trying to, look at those areas and then bring out equipment. Mainly it will be focused on infusion vascular access and in renal business. Government of India is also working on new medical device policy today, and we have already seen the draft policy. Recently we were called by the Rajya Sabha committee, the medical device industry, and they are looking at issues which is faced by the medtech industry, and also what policies we need to make India self-reliant. And there are certain suggestions being made by us, especially keeping in mind the R&D focus, which is completely missing in India. Though the company today has more than 300 patents, and we have almost 100 patent applications pending. But I think if we have a robust R&D policy for this sector, I think we'll be able to probably invest more in R&D and also collaborate with more academic institutions in the long run. I'm also happy to the company was selected as Medical Device Leader of the Year by Government of India, Department of Pharmaceuticals. So we got the top prize again for year 2021 performance, and this award was given by the Minister of State for Chemicals and Fertilizers, Mr. Kuba, and we were. I think that's a big honor for the company. In 2018, we were Medical Device Company of the Year, and 2021 we were given Medical Device Leader of the Year award. Again, I think when we look at the current year, the only few challenges which I see is the raw material costs and the supply chain disruption. But if this is somehow, when we see a little bit of cooling down of the economy, as we are already, and I think in Q2 is already some prediction that Europe and USA will have some demand slowdown. I think because of that, I think raw material prices will start coming down, And even on the supply chain side, I think once the demand of containers, better availability of transit times from India to other countries for export or even for import. So all that will help us during the year to maybe bring back the margin. Our target for EBITDA margin for FY23 is around 25%. If still things remain where they are today, we will see margin close to around 25%. For the guidance is around 25% for the whole year. In terms of business, I think our order book is already good. We have long-term contracts with our customers. Mainly in Europe, we see a good traction developing. In Latin America, larger economies like Brazil, Mexico, Argentina, we have a good market share, and we see more products being introduced in those countries. When we look at our exposure into CIS countries, especially Russia, our exposure was around 1.5% of total revenue. So we are not impacted at all with exposure into Russia. Currently, we still export our products to Russia. Medical devices are exempted. Even our products are going to Ukraine because for medical supplies, there's a green channel for medical supplies to get into Ukraine. So we see no impact of war as such in terms of demand. There is no demand disruption because of war from either Russia or CIS or other countries in the neighboring vicinity. The demand continues to be robust for Europe, India, and also for Latin America markets. So we see continuous demand from those markets. The new products we launched last year, especially our pre-filled syringes, have got a good traction. We are already seeing good demand building up in Europe for these products. In India also, we have captured almost 25 to 30% market share because we are the only manufacturer for this product in India. It was a 100% import substitute. So whatever today our clear focus is that whatever products we develop, mostly it will be kept in mind that they are import substitutes, and also we see a global market for those products. So our R&D team, we are also strengthening our R&D team. We'll be adding at least 20 to 25% more people in the R&D team in current year, and that will also help us to also roll out products faster. Because today, because of the regulatory changes which are happening globally, it is taking more time to launch new products. So earlier, for example, 2 or 3 years ago, we could launch a new product in 24 months to 36 months. The timeline has now moved to 36 months to 48 months, especially because of these regulatory delays happening in registering products in overseas markets. So whatever products we have registered in last 2-3 years, we are seeing already a good traction. We are already seeing a good response, and we are seeing a demand created for those products. But it doesn't apply to applies to everybody. All companies which are selling in the highly regulated countries, the regulatory regime is kind of overloaded, and also there has been a delay in processing documents and files for new products. So for new product launches, there will be certain slowdown in terms of getting regulatory approval. But whatever we have launched so far, I think we are already seeing a good traction. So overall, we don't see any disruption in terms of sales from new products which we have launched so far as on today. But in future, what we'll be developing completely brand new products, we will see some lag in terms of getting regulatory approval. And this is a global situation because of the pandemic. 2 years, there's a lot of backlog being created for in most of the countries. And for example, today to register a product in Mexico, it takes almost 2 years. Or even to register a product in Europe to get a CE mark, earlier used to take 6 months to 12 months. Now the timeline is moved from 18 months to 24 months. So the biggest, I would say, concern for us is today's regulatory backlog. Though we may come with new products and try to speed up our R&D and pipeline of new products, but regulatory delays may affect a little bit in terms of launching these products in highly regulated markets. though we'll be able to sell these products in India because India, the regulatory regime is much faster because of the new changes which have happened. But in overseas market, we may face some delay. So these are the comments from my side, and I'm happy to take more questions, and from our friends who are on the call. And I thank you once again for joining this call and for patiently listening to me. Thank you again. And Mitesh, over to you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We have the first question from the line of Sumit Gupta, Mirae Asset Capital Markets. Please go ahead, sir.
Yeah, hi everyone. Good morning. Good afternoon, sir. So thank you for giving the opportunity. So I have a few questions. So first is regarding the infusion therapy segment. So it has contributed around 63% to the total sales in FY22, while it was around 71% in FY21. So like renal segment has taken the market share, taken the share from this segment from 4 to 7%. So do you see like renal taking more share from the infusion therapy segment in contributing to the total sales? And how do you see renal going forward?
It is also renal now because because of PLI scheme and because of the expansion we are doing, our new capex is happening mostly in renal space right now. So we think that renal will contribute more in future. So let's say for FY23 we are seeing renal to contribute now close to 9 to 10%. So this will maybe because we can't be focused on one therapy segment too much. So and that was the reason that we have started renal and we also had a traction in this business. So we think that infusion therapy will be close to around 60-61%, and renal will contribute around 10%.
Okay, sir. So this is for the next 2 to 3 years or what?
Yeah, I think I'm talking more to FY23, but as we move to let's say 24 and 25, renal will move to maybe towards close to around 12-13%.
Okay, understood, sir. And sir, regarding the other segment, it has also increased drastically from 8 to 12%. So what all segments are there within the others which have contributed to this 4% increase in the share?
The other segment is also diagnostics, which is where we are also, we got a PLI scheme and we are investing there in that area also. So that will also start contributing. And then of course oncology, we have respiratory care. So a lot of other segments are part of that others group.
Oh, right, sir. So that's what I'm asking. So regarding the renal and these diagnostics and everything, so other segments, so these are expected to have more share going forward. So infusion therapy segment, it will come down to around 60-61%, and going forward in the next 3 to 4 years also, can it come to like 58-59% also?
I don't think, because that's our core business, and as we'll be adding more products in the core category, and because we have a specialty in this area. So but the balancing, it's very hard to make this judgment for very long term. But I think for short term, I think as we have a focus more on renal right now, so and especially India, because renal is more focused towards India. The growth is mainly happening in India right now because of import substitute and part of PLI. So we can safely assume 61 to 62% right now. Let's say for FY23-24.
Understood, sir. Okay. And sir, follow-up question on this only. So our dialysis machine is under the NDP trials right now. So how has the response been from the end customers? Like, is it comparable to like the competitors' products? Dialysis machine.
See, the features have to match. See, today nobody is going to use we don't want to repeat the ventilator story in India. You've seen that many ventilators were supplied by local companies to government, but almost there was a 40 to 50% failure rate in those ventilators, or they were not performing as per the specs which were laid out. from the imported ventilators. So we are very clear that because what we did was for last 1.5 years we sold machines which we were importing from outside in CKD condition.
Okay.
And we developed our own technology side by side, and we have matched feature to feature, ensuring that whatever performance is there in an imported machine is also there in our machine.
Right, sir. Hello.
Yeah.
Yes, sir. And sir, can you give us a glimpse on the US business? How has the progress been going in both the infusion segment and the animal healthcare?
So in US, I think animal healthcare business is steady. So it says at a steady run rate. But on the human side, yes, we are waiting for FDA approval. Hopefully, we are expecting a first approval by August, September. And once we get through, I think then probably by end of the year, we'll start seeing some revenues starting from US business.
Okay. So what kind of revenue can we expect from the US business?
It's very hard to say right now because we are working on certain contracts right now from large customers. So as and when these contracts get through, probably then we'll have more visibility on that.
Okay.
See, US FDA doesn't mean that you can get business. US FDA means you have a license to sell in the US market. But then to sell to someone, you need now US works very differently compared to any other part of the world. US market is managed by 3-4 large GPOs.
Right.
And that is what we are trying to get into one of these GPOs, and probably that will be for us the initial start, and that is what we are working on right now. And those GPOs are also waiting for FDA to happen. So they don't want to sign any contract till we have our FDA clearance.
Okay, sir.
Yeah.
And regarding, sir, CAPEX, so in third quarter, you guided for 250 crores to be done within FY22 and FY23. But now,
Correct.
So this additional, hello?
Yeah, Sumit, sorry, I lost you for a few seconds. Can you repeat the question?
Yes, sir. So my point is, in third quarter call, so it was 250 crores was the guidance for this FY22 and FY23 for the CAPEX. So now it has increased to 300 crores, so additional 50 crores. So where do you plan to invest all this? So like 151 crores has been spent already.
We will be setting up a plant, which was not in the earlier plan. So now we have acquired a new land and we will be setting up a gamma sterilization plant. And that is the main reason that additional 50 crores CAPEX invest, because a lot of our new products are gamma sterile and we don't have a facility nearby our plants. And we want to have a captive unit so that we have a control on quality and the quality of sterilization. And that was and then of course this plant is for next 15 to 30 years. So and this is the controlled radiation plant. So this is where we are investing. So that will give us kind of a sterilization security. Otherwise, we have to depend on outside vendors, and sometimes the quality of product is compromised.
Okay. So this land acquired is near IMT plant only in Faridabad.
Correct. Yeah, it is in Faridabad only.
Okay. And sir, last question from my side. So regarding obviously the crude and logistics costs have definitely impacted. So have you taken any price hike for the?
We have taken price hike. If we had not taken a price hike, the margin of would have dropped by at least 7-8% further. So we have taken price hike for most of the customers, in the range of 5 to 7% already during the year. But the customers have a double whammy. First, they are seeing a price increase because of freight costs. This is almost quadrupled in last 1 year. So for the same product, they have to pay higher freight, and then of course there is a price hike from our side. So they are also suffering because of that. So it has to be a graded approach. We can't just go all out and then do the price increase at one go, and they also see a freight increase, so they almost get a double impact.
Right, sir. Yeah. So suppose crude increase by 10%.
Every 6 months we do a price negotiation, try to increase couple of percent points, and I think that is what is important. And sometimes we also get advantage because of currency also.
Okay.
As I mentioned, rupee is devalued by 3-4% in last 2-3 months. So maybe that will also help because our 2/3 business is exports.
So in that case, raw material supply, you are procuring raw materials from China and everywhere else also. So in that case, it will offset the advantage also.
But no. See, but we have more exports than imports.
Right. Okay. Understood.
So we have positive flow of dollars compared to, so import is, let's say, small percentage, whereas export is very high. So it is not setting off. We have a surplus dollars basically. So we'll have a better price realization. See, somewhere will be hedged for imports, and on the other side, wherever we have open dollars or higher export, like more positive currency, that will help us to get a better realization.
Okay. So have you added any more customers in this quarter, like in terms of in both India as well as abroad?
We don't track customer addition. I think for us is even the same customer, if is taking more products for us, that is more important. Because we want to use the same funnel, same pipe to put more products in. For us, more important to put more products to same customer. Like a hospital, today I don't want to spread too much into hospital, but if today Apollo is buying 5 products, we will try to sell them 10 products. Because the supply chain is established, the relationship is established, it's more easier to sell to the same customer to sell to a new customer.
Okay, sir. Sir, okay. Last question.
Mostly, so I just want to end here. Mostly growth comes from existing customers. It's very hard to quantify, but majority of the growth will come from existing customers.
Understood, sir. Okay. So last question regarding the US business only. So how do you see this US business going forward in the next 4-5 years? In terms of, can you give us any numbers in terms of revenue or margins?
It's very hard to give a number right now. As I told you earlier, once we start finalizing the contract, see, the idea is to build maybe a business of $15-20 million in the next 4-5 years.
Okay.
Yeah.
Okay. Thank you, sir. That's all from my side.
Thank you.
Thank you, sir. We have the next question from the line of Vivek Ganguly from Nine Rivers Capital. Please go ahead, sir.
Hi, Vivek.
Sir, I just noticed his line got dropped off, sir. I'm taking the next question.
Yeah.
The next question is from the line of Pankit Shah from Dinoro Wealth. Please go ahead.
Hi, sir. Good afternoon.
Yeah, hi. Good afternoon, Ankit.
Yeah. So actually, my question was on the US market. So from I think from some time, we are just seeing the delay for the US approval in FDA.
Yeah.
So wanted to understand what is the issue out there, and because
The issue is on the examination of documents, and this is taking more time because of the COVID pandemic. So that is the main issue. Otherwise, there is no other issue. So we are just waiting for them to give us a final green light. And from our side, we have submitted all the documents. Whatever additional documents required, we have submitted everything. Hopefully, now we are in the final round. So we are expecting this to happen soon now. And as I said, August, September.
Okay.
And I think we are maintaining that consistently. I think we have not changed any timeline. Even if you see,
last previous was that we are planning to launch in second half of FY22, and we expect it to quarter.
Yeah, exactly. So the approval is US FDA approvals are expected in July, August. That is what I had mentioned earlier also.
Okay. Yeah. And other than that, my question basically was on wanted your view on volume growth. How has the volume been shaping up? Because we've been taking continuous price hikes. I see our raw materials has been increased by say 33% as compared to last year, and our sales has been growing by say 16, 17, 18%.
Correct.
Yeah. So majority of the growth has been through our price increases. No.
So price increase growth is not in every segment we have a price increase. So only with some limited segments we have a price increase. So volume growth versus price increase, I think the ratio would be 1/3 or maybe 25%, 75%. So 25% will be price increase and 75% will be volume growth.
Okay. Because I was of the view that across products the prices have been increasing.
Not really, not everywhere.
Okay. And if I was not wrong, that you mentioned the EBITDA margins of 25% for FY23.
Yeah, that is the guidance we have. At this time, this is the guidance we have.
Right. So with current things as it is, how currently as things stand?
I think things have started softening up a bit, right now, in terms of we are seeing little drop in raw material pricing right now, and also, freights have started softening a little bit. So hopefully if this trend continues and, you'll see that in next 3-4 months, we will see some stabilization of pricing.
So
otherwise it was just one-sided, for last 8-9 months it was just one-sided growth.
Right, agreed. So considering second half to be much better, and we have already taken price increases.
Yeah, we have taken price increases, and of course the situation is very volatile. So it's very hard to give a very concrete reply that what will happen after 6 months. This is just based on current trends, inflation trends, current consumption trends, and globally what's happening.
Right. Okay. Thank you so much.
Yeah, thank you.
Thank you, sir. We have the next question from the line of Vivek Ganguly from Nine Rivers Capital. Please go ahead, sir.
Thank you for the opportunity. Himanshu, I have 2 questions. One is regarding the registration, the law that for medical devices that was enacted, that all medical devices, whether domestically produced or imported, they have to be registered by the end of next year.
Right.
So what is the status there? Are we seeing some amount of imports or domestic products falling off the shelf, and that's white space opening up for us? Is something like that likely to happen? If yes, then what is the kind of scope there?
See, it's a very deep question, I would say. But, yes, all medical devices sold in India now have to be registered. That is very clear now, from 1st October 2021. Earlier it was voluntary, now it's compulsory. So now today, if you want to import something into India or manufacture, you need to register with CDSCO or with, let's say, Indian FDA. Now, there may be a fallout, but the fallout will be for fly-by-night operators. Today, somebody who was running a restaurant was importing oxygen concentrators. You don't want that situation to happen.
Right.
You want a regular company, let's say Honeywell or Philips, to import their concentrators and sell in India. These are more reputed. So you will see market being filtered out, where a lot of unregulated or players will move out from the market, and it will be only place for regulated and better quality products. Also, we have now standards of 1400 medical devices, BIS standards, which was not there earlier. So with new standards coming in, regulation coming in, it's like pharma, like where pharma sector is upgraded in the last 15-20 years. So same thing will happen in medtech. We are just waiting for this to happen, the regulatory regime to come in and help us to bring more quality products in the market. And of course, the opportunity will open for us, because as government is pushing more for local manufacturing, you're seeing a lot of traction happening in medtech sector in local manufacturing. So that will definitely, add as an advantage for us. Because when we, let's say, bid for any business which is government business, they are looking at Make in India products, especially if you are meeting the standards and quality there. And in terms of, there's an opportunity for import substitution. Today our dialysis business was import substitution. Our pre-filled syringes was import substitution product. Our oncology range is import substitution. So we are picking, the product areas where we think there is an import dependence, and we can make products in India and sell in India and also for global markets.
Got it. So, what the guidance that people are looking for is like 20% of the market is likely to open up or something like that. But on a longer term basis, we understand, a lot of the fly-by-night and weak companies will fall off the radar. But so that's a real thing happening.
I'm not sure whether 20% will fall out or not, because yes, definitely there are many companies importing products without any license, without any regulatory approvals. So all those products will disappear from the market. Only companies which were selling, let's say, which have quality products, so they will probably gain market share.
Right. That's
For companies like us which operate in the regulatory environmental already, let's say outside India, for us we will start, and that's the reason in last year you've seen a 30% growth in India business.
Right.
Earlier we were growing only 10%, 15%. Last year we've seen 30%. Even this year, as I spoke earlier, we've given a guidance of 25 to 30% growth for India business.
So this is largely where this could be, part of the reason might be this disappearance of the, the vehicle or the fly-by-night.
Yeah, and definitely the larger companies will start getting more market share.
Right.
In pharma also same thing has happened. If you see in 10, 15 years, larger companies have got more market share and smaller companies have kind of disappeared.
Right.
So similar phenomena should happen here also. That's what I expect. But of course, it's hard to predict right now because we are just at the cusp of change of regulatory regime.
Right. So Himanshu, my second question is regarding, the white label or the private label products that you all make and supply to customers in the US. I assume you all are supplying to the US. So when you all are supplying to the...
Yeah, we have few customers where we supply to US. Currently, some of our class 1 devices and veterinary products go to US.
Right. So would that not mean that FDA would have done your plant inspection and already...
So we have had 2 plant inspections already, in 2010 and 2015.
Right.
But since, we have had 2 inspections already in 2 years, in 2010 and 2015.
Right.
But since last 5-6 years, there is no plant inspection. But as we add more products, we will definitely see, and we have to be ready any day.
So earlier, in the conversation, you mentioned that you all were awaiting US FDA inspections and approvals for your...
Approval is on the product side because, you need a 510K approval.
Okay.
So in medical devices, you can, if you have a substantial equivalence of a product which is already sold in the US market, and based on substantial equivalence principle, based on documentary evidence, you can get a 510K approval, which is a US FDA approval.
Right.
Especially for class 2 and class 3 devices.
Right.
So, and mostly our products fall under class 2 and class 3.
Right.
So based on that approval, you'll be able to sell in the US market. Now, during the period of approval, US FDA can come anytime and inspect the plant.
Right.
So that is not mandatory, plant inspection not mandatory to give a 510K approval.
Right. Got it. So even on documentary evidence, you all can get a approval and start selling.
Yeah, absolutely. And we have been already selling some products, so we know how it works. Yeah.
So the other thing, the third question, and if I can just squeeze that in, except the 30-odd% that you all sell to third party for OEM and private label.
Yeah, correct. Yeah.
So going forward, as you all get these approvals, this percentage will shrink. Is that a fair assumption to make, and most of it will then get sold under your own brand name?
See, the target is to sell more and more under Polymed brand. So let's say in FY21 it was 70-30, now it's moved to 72-28.
Right.
So our target is move to as close to 80%. See, we can't avoid white label in any case. There will be certain customers who would need white label under, because if they're very large companies, they will want under their own brand.
Okay.
So our target is to, if we have an 80-20 ratio, I think we are happy with that. But currently it's 70-28 is also a good thing. At least our brand is going in so many countries and so many markets.
Right. And you're filling up your capacity.
Yes, exactly.
Okay. Thank you. That will be all from my end. Thank you.
Thank you. Thanks a lot.
Thank you, sir. We take the next question from the line of Sumit Gupta from Mirae Asset Capital Markets. Please go ahead, sir.
Thank you. Sir, just I had one question only regarding the price hikes that you talked about. So what are products did you take the price hike for? Like selected products only, and in both abroad as well as Indian market?
So the price hike is mainly for vascular products because that is where we have a core competence. And then there are certain products we have taken price hikes. I can't disclose more information. It's confidential to company's business.
Okay, understood, sir. Thank you.
Thank you, Mr. Gupta. We take the next question from the line of Mr. Venkat from 3 Sigma Financials. Please go ahead.
Hi, thanks for the opportunity. I just have a couple of questions. My first question is on, sir, the increase in sales that we are seeing, is it due to increase in footfalls in the hospitals, or are we gaining market share? How do you see, what is contributing to this?
That's a great question, Mr. Venkat. So today, if you see hospitals, and I think as a lot of hospitals are listed today, so hospitals, the healthcare sector is going around 10 to 12%.
Okay.
Now in India, we have grown by 30%. India business grown by 30%. So definitely we are gaining market share from other companies.
Okay. And okay, so are we gaining market share from a limited basket, or is it like across? Are we winning across every?
So you gain market share in renal business, in vascular business, in blood transfusion business, diagnosis, across all the segments.
All the segments we are seeing increase in market share. Fantastic.
Exactly.
So coming to US sales, when I look at some of the large brands, how are we going to actually compete with those large brands in US? And then that too, we are having some 15 million target in next 4-5 years. Are you really excited with this number, or are you thinking that we can target more? Actually, 15 million might translate to something like 110 or 120 crores.
Correct.
So is this the target we are looking at in US market?
See, I think it's a build up. See, it can go more also, but it is we have to start somewhere. So we have to set up certain realistic numbers, targets, and and we have already hired, as we informed earlier, we have a CEO, we have a sales manager there who is already now. See, for the last 2 years, nobody was meeting in the US. I'm sure you have connects in US. Everybody was working from home, and nobody was even ready to change vendors.
Right.
So now things have opened up. US has started, we have started seeing conferences again. We have started seeing, people meeting again. So that is where, and of course there was a delay in getting a US FDA approval. So everything combined together delayed our whole US, launch. Now with everything opening up, we already made investments in the US. We opened a subsidiary last year in the US. 100% step down subsidiary in US, because we wanted that the business should happen to the subsidiary, because we need insurances in US. We need, maybe warehouse in the US. So we have planned everything. But the only thing is now execution is waiting. As we get a FDA approval, we start executing that plan. Now it can move from, needle can move from 0 to 100 also. And the question is how it moves, how people foresee India as an opportunity. Because today, still India is not seen as a medical device manufacturing base for many US companies.
That's true. Yeah.
It will take some time to build that confidence, even for us and for the customers. But once that builds up, today, our revenue, if you look at our exports, almost, 40% over exports are coming from Europe. Because people have put confidence in our product. We have an office there in Europe. We have a CEO. So we are able to do that very well now.
And we also have an R&D facility in Europe, right? So that also
we also have our Italy company, which is, manufacturing, doing new product development also there. So all that is, in last 4-5 years, we have good experience of, building Europe business from less than 15% to almost now 40% of our total exports.
Okay. So my next question is on, you were talking about decrease in raw material prices, or rather they are softening.
I hope so, sir.
No, you said they are softening, right? So are you seeing softening of raw material prices, particularly in PVC or something like that?
Yeah, PVC we have seen. PVC has the last quote we received was around 7% lower than the previous month. So now we are seeing slightly softening. So like before this, it was around $1,580 a metric ton, Mumbai, and now it is, I think, 1,480 or 1,470. So there is some drop already.
Okay. So how will this impact our raw material? Though our inventory looks like we have decent inventory, so will it impact our?
We maintain 2 months inventory.
Right.
Generally, we maintain 2 months inventory.
Okay, so that will not impact our competitive advantage.
Whatever they are quoting is going to come to us only after 2 months. No, it's not going to come immediately.
Okay.
This month they will put it on the ship. The transit time, delivery to us, it almost takes 2 months.
So the PLI. So in the presentation you have mentioned about participating in PLI and all. So if you can just elaborate, sorry I joined late because I was attending another call. So can you just elaborate if you already elaborated? Sorry about that. What are we doing in PLI?
So PLI, we have 2 PLIs basically. We have 2 PLIs. One is for our dialysis products, which was awarded to us earlier, which are all import substitutes. And where we are going to make dialysis machine, which we have already launched our first trial machine in the market, indigenously manufactured. Then we have the second PLI, which is for diagnostic products. Under first PLI, we have to do incremental revenue of 60 crores a year to have a 5% incentive. Against the second PLI, we have to do incremental revenue of 1 crore, and on every 1 crore incremental revenue, we'll get 5% incentive.
Okay. So are we the only manufacturers, because we already have the filters, right?
There are 2 companies which have got PLI. One is a Japanese company called Nipro, which is based out of a manufacturing plant in Pune, and we are the second company. There are only 2 companies in India making dialysis products right now. And for diagnostics, of course, there are many companies for diagnostic products. But again, the current basket we have, I think in terms of blood collection tubes, blood collection needles, so we are already getting laboratories right now. So then with more products which we are adding in the pipe, I think we'll be able to get more market share.
Okay. So whatever money we have collected as part of the QIP, so that we are going to deploy here, or are we going to do some additional lending?
Mainly what we have collected in QIP is going mainly in CAPEX. So as I mentioned earlier, we are going to spend between FY22 and FY23. In 2 years, we are going to spend close to 300 crores. Earlier, the plan was 250 crores. Now we are going to spend 300 crores. So we are already building 2 new plants. It will be operational by end of the year. And we'll be putting 2 more additional plants, which includes one sterilization facility, gamma sterilization facility. This will be operational by FY24.
Fantastic. Thank you very much, sir, and best of luck. I don't have any further questions.
Thank you very much, sir.
Thank you, sir. We take the next question from the line of Mitesh Shah from ICICI Securities. Please go ahead, sir.
Thanks for taking my question. Sir, about the infusion therapies came down from the 71%, 63%. I can see that your growth is around 5%. So is that reason because of the slowdown in the export market, or is the other reason for that?
The exports have grown only 10 to 11% last year. And of course, there are various reasons for that, slowdown because of global supply chain disruption, container availability issues, goods reaching late to customers. I mentioned sometimes goods are reaching in 3 months, 4 months to destinations. So that the repeat demand kind of gets slowed down a bit. But of course, our focus has been more domestic market in last 2-3 years. We have built the team, we built new divisions, we hired a lot of people in domestic market. So domestic is more dialysis focused, more diagnostic focused. So we have seen more growth there basically in those segments last 1.5 years.
Going forward also, you are expecting the infusion therapy will be a slow growing time?
Slow growth is not going to be like, for example, US will be only infusion, for example. Or Europe is only today infusion business only.
Right.
There's no dialysis or no diagnostic business in Europe.
So that will drive the infusion therapy.
Yeah, so basically once, we get more traction, and I think when the logistics kind of stabilizes, we will see infusion. But 60 to 63% is a good number for infusion and rest of the businesses, because we also want to diversify the portfolio a bit.
Got it. And also the price increase, most of you have taken the vascular, that will also support the growth, right?
Yeah. So price increase already happened partially. We've taken already partial price increase last year. Now we are waiting for, the raw material prices, where the trend is. It's just the beginning of the year. And of course, you always try to tell your customers, okay, order in time, give us forecast, or, otherwise, we'll see a price increase trend. But as the prices started softening down a bit, So I think we'll have to stabilize somewhere, at the end.
And sir, about diagnostic, how much diagnostic contribution in this year?
Diagnostic, I don't have a number right now, but the diagnostic contribution will be close to around 35-40 crores.
Okay, 35-40 crores. And we are expecting that to substantially grow because of the...
And plus, we see a demand in kits, we see demand in blood collection tubes, needles. So we are building that portfolio also.
Okay. Sir, you already have 2 months of inventories, so might be the...
inventory of raw materials or what? Finished goods?
Yeah, raw materials.
So raw material inventories, we have 2 months inventory.
Right. So if it would be a softening in the raw material prices, then also your Q1 could be impacted because you have a high...
No. The Q1 or Q4 is similar.
Okay, Q1 and the Q4 is similar.
Yes, exactly.
Still, are you expecting that the margin would be increased to 25% in FY23?
Yeah, so by the time we end the financial year, we think that we should, for the whole year, we should look at margin of around 25%. That is the guidance, we have today. And I think as for the internal working, because last year was a very difficult year.
Right.
Because logistic costs were nobody anticipated that a container which used to cost $1,000 will cost us $10,000 for shipping, whether inward or outward.
And sir, about the export market, you already have challenges in FY22 because of the growth was slowed down, and you still expecting a 15% kind of growth?
No, we are, because we have got some new products which have been registered in certain markets, and this is based on the business plan. The growth number is based on the business plan. Because every year you create a business plan, customer-wise business plan, product-wise business plan. So we are already seeing that commitment and number ahead of us.
So I meant to say that it won't be a conservative 15%, I think.
See, Mitesh, again, we don't know the supply chain situation globally, but I think 15% is a decent number in exports to grow, actually.
Got it, sir.
Yeah.
Thank you.
Thank you, Mr. Shah. We take the next question from the line of Girish Jain from KGMC Capital. Please go ahead, sir.
Hello, Himanshu ji. Thank you for the opportunity.
Good afternoon. How are you, sir?
Fine. Just a couple of questions. Just you mentioned about this new medical device policy.
Yeah.
Can you just give a broad sense how this will be helpful for the company, and by when do you think it can be implemented by the government?
See, the government has already come with a draft policy, and I think what I see is at least a policy certainty. Because, this whole industry was unregulated. There was no policy that, what will happen to medical device industry, whether we'll be part of pharma or we'll be part of the drug industry. So now there is a carve-out of separate industry segment. Earlier we were part of health, then we were pushed to pharma. So now there is a new segment which is created for medical devices. And when we have a policy, then at least the government expense and what government will be spending on medical devices. Today, for example, government has made a plan of 2.5% GDP on healthcare. That's what the plan is. They may be spending only 1.5% also. But at least they have a plan which is created for 2.5%. Then medtech also, medical devices also, there will be a plan, they will lay out a plan that, okay, this is the purchase we'll be doing, this is the kind of consumption we see, what is the policy for software, what is the policy for medical equipment, going forward, what the country is looking at, whether we are looking at 70% import dependence, we are looking at 50%. So all this will be part of the policy, Giriji.
Understood.
You get a guidance that what is going to happen in future. There will be some certain certainty.
Right.
And that helps you to make your own business plan that how you want to get into the next. For example, for PLI, I push the government, for PLI for dialysis products. Because I told them 100% import is there for these products. And how can we be so dependent on import for dialysis, which is a very critical treatment. Tomorrow, India has certain situation and there is no dialysis products, the dialysis will stop. So many people will die. So that's how they brought out this scheme for, PLI for dialysis products. Similarly, government with that policy you have a dialogue with the government.
Right.
So what should be done? How should be done? What are the challenges we are facing? What products should be technology dependent? In certain areas, government is also trying to make a technology pool. And then pass it on the industry.
Right. The next point I wanted to just seek a clarification. You mentioned earlier in your Q3 call that the capex outline was 250 crores. Now it has gone up to 300.
Yeah.
This includes the Faridabad 4, unit number 4, Jaipur unit number 2, and even the Faridabad unit number 5 and the new Gamma sterilization facility, right?
Correct, sir. Correct.
And out of this, 2 are expected to become operational by the third quarter of this year.
And 2 more facilities by FY24.
So in your guidance of 18 to 20% of this year, you are including the operationalization of these 2 facilities? Of course, it will only be
No. Originally operational only by end of the year or end of the calendar year. So we will only start seeing commercial production happening in, let's say, from quarter 4.
Okay, so the impact will be seen in the next financial year.
A lot of expansion is currently happening in existing plants. Like the IMT plant in Faridabad, we have almost double capacity for dialysis products. We have added capacity for diagnostic products. We added capacity for pre-filled syringes and vaccination syringes. So all that is investments have happened in existing plants. A lot of automation has happened in existing plants.
Right. And last point, can you just give some idea on the debt profile of the company? How much is the long-term debt and working capital debt? Because there has been some increase in the net working capital, right?
Yeah, of course, Girishji, the hospitals don't pay in time. And also because of global supply chain delays, the products are not reaching in time to customers. Today, earlier we could ship products to Europe in, let's say, 20-25 days. Now it takes almost 2 months.
Okay.
The number of vessels have reduced from Bombay or Mundra port, for example. Today, earlier there were 2 ships for Europe every week. Now there's only 1 ship every 10 days, for example.
So now,
those delays, the payment cycle has become a little longer. The hospitals are paying little delayed. So overall, and plus there's also increase in business. So if the business has increased by 17-18%, definitely the working capital involvement will become little big, more than last year.
So last policy you mentioned
side, inventory side, or finished goods inventory side, or let's say debtor side. On the long-term debt, Girishji, the long-term debt is reducing. We are close to around 50 crores only for long-term debt.
Okay.
Which is also in foreign exchange and at a very low amount of around less than 2% interest bearing.
That's good. That's interesting. Okay.
And we are not repaying that, so we have cash in the company, but we are maintaining because there is a prepayment penalty also there. So and though it is at such a low rate, then there is no point in paying it off, and there is no reason to do that.
Understood. Thank you, Mansuji, and all the best.
Thank you, sir. Thank you.
Thank you, Mr. Jain. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
I think thank you very much, everyone, for being on the call. And there were a lot of good questions. So for us, also a lot of things to introspect. And we'll keep on updating our esteemed investors and shareholders as and when we have more information about our US business and the expansion plans and new products. So thank you very much once again, everyone. Have a nice day.
Thank you, sir. On behalf of ICICI Security, that concludes this conference call. Thank you for joining us. You may now disconnect your line.
Thank you.